Good day, divergence traders. Are we having fun yet? Oh man, look at this shit. Look at it, look at it, look at it. Let me put it on. Where can we see all of this wonderful, huge drops and rallies, moves? So here's this day, 2 days ago. How much did we drop from the top? 246. And then yesterday, how much did we drop from the top? 415. And then now today, we dropped, or we rallied up, I should say, 197. Isn't that messed up? It's like, what are they trying to do? Kill us? I think so. Like, anybody who was long in here, they got you, man. They trapped you, and then they came and got you. Now up here, again, anybody that was long, and you had your stops down here, or even below the low of yesterday, they came and fucking got you. Now, all the people who were long down in here, well, you were lucky today. But there's people selling too. There's also a lot of people selling in this right here, thinking that it's going to push down lower and lower. And they come and got you. If you were selling all in here, now that rallies up huge, and then they come and get you. See what I mean? It's just one big motherfucking stop hunt. They're on the hunt, man. And they ain't kidding around. They ain't kidding around the last 3 days. Holy fuck. So anyway, let's go back today. Let me show you the setups of today. This is the 5 minute. Okay? And we have a low and a retracement and a lower low. I know this one's difficult to spot. I know, believe me. I couldn't see it for years. Years, man. And then I finally went, oh yeah, that's divergence, motherfucker. Anyway, so where would have you got in? Well, the news triggered, so it went way the fuck up here. Somewhere in here, you know, you could have got in. Okay? But you'd have to be getting in on mid-flight. Okay? Being a buyer. So anyway, if you didn't get in somewhere in here, then you could have waited for a retracement, like right here. Lower close, buy it, up it goes. Okay, there wasn't one here. It was too far from the 5. Okay, and then up here, did we have divergence? Oh yeah. From here to here, and yes, it's okay to strike through other candles or bars. No problemo. Okay, no problemo. And you would have drew it from like somewhere like that. And it would have went somewhere down there. So your entry point was right there to sell it. Because we drew it to this candle, right? We didn't draw it to these ones. Although that, hold on, actually I can't do that. What am I doing? Okay. So say you drew it to this one. Okay? So your entry was right here. Yeah, and it would have failed. And it would have almost failed on you if you jumped out. Okay, so right when this candle opened is where you would have sold it. Your stop would be up here. So you would have sold it right at this price. Your stop was 50 pips. It came back up 37 pips, but it didn't hit your stop. And then it came down. You would have got your 1-to-1 win-loss ratio. So it wasn't a trade. I mean, it was a good trade, but you would have had some drawdown here freaking you out. But you see how they sold off of these wicks? And they took it down. So whether you did this trade, you would have had more fear in the first sell, or if you did this trade with virtually no drawdown, and it just went down. And it went down 75 points, okay? Then we had this setup, which is right here, hidden divergence, okay? I'm just going to remove this one, okay, guys, because it's going to look messed up. But you remember it. It was a good set. It was a good trade. No. This line up down here was for this line up here to sell it, okay? Can't reuse it because MetaTrader does not like us to reuse the line. So it's from right here to right there. See that? One going up, one going down. Buy it right here. Okay? This is the current trade. It hasn't hit target yet. The stop was 70 points. So far, we've gone up only 24 points. Okay? So that's the NASDAQ. As you can see, even though on this choppy day here, it was awful, the open today, how it just went up and down. I don't know how many. Here, let's go look. Look at this crap. For like half an hour, it opened up, where did it open up? Yeah, right here. This is where it opened up, right here, and it did this shit for half an hour. And then it finally broke out to the downside. It was crappy. There was no trade here for the first half an hour. See, there's 10 o'clock right here. From 9:30 to 10 o'clock, it was crap. Crapola. So anyway, there's the trade setups. See, today the trade setups on the 5-minute were better than the 1-minute. You just never know. That's why you got to have a couple screens and check them out. Okay, let's look at that S and the P now. Oh, it had a deeper dip from the top. Wow. But there was divergence right here. See that? And it had the same up. There was the sell right in here somewhere, and down it went. And here's, hold on, I'll get back to that other one. I know I missed it at the very bottom of today. I'll get back to it. We had a higher close, sell it, down it goes. Okay, that was it. That was the only trades for there. But we did have that same trade here, low and lower low, okay? Remember I told you about the low and lower lows? And the high and the higher highs? I told you guys over and over, here's the low and the lower low. And then here is the buy. You would have jumped in somewhere in here, just like on the NASDAQ. And here's the same exact lower close, buy it, up it goes. See? Exact same thing as the NASDAQ. And there it is. Lower close, buy it on the open, up it goes. Let's move on now to the Dow. There must be the same thing on the fucking Dow. Oh, yeah. Same shit. See? Same thing. Low and lower low. See how it's the exact same? Can you see that? And right here. Crazy, I see right here. And then the news took off, and you would have had to jump in somewhere in here or wait for a pullback. I know it takes a lot of patience to wait. And even though it's only like 10 minutes before you had to get in, you only had to wait 10 minutes if you wanted to buy right here. It's 10 minutes. Hold on. No, it's 5, 10, 15. Oh, I'm sorry. It's 15 minutes. Okay, I was off by 5 minutes. On the opening of this candle right here was 15 minutes, and you would buy it, and up it goes. That's it. You would have won. That is the Dow. Yeah, there's another trade up here like this. Ding, ding. Same as the other two charts. Exact same thing. They were holding hands today and walking along the chart. That's what they were doing. That's what they were doing. All three of them. The NASDAQ, the S&P, and the Dow. They were saying, come on, come on. And they're holding on each other's hand. I'll never forget. Oh my God, I just thought of something. I'll never forget my broker, Tim Hannigan. Oh, the son of a gun. You'd say, what do you want me to do? To come there and hold your hand until everything's okay? Like I was a little kid or something. Oh, he was a funny one. He was a funny one. I said, no, no, no. I definitely never asked him whatever question I asked him that day. And he said, oh, do you want me to come and hold your hand? Hilarious. Hilarious. Okay. That's the thing in trading, eh? You got to pull up your big boy pants or, big girl pants, and you got to do it yourself. No one's going to come and hold your hand and say everything's okay when you're in drawdown. No one's going to do that. Okay? Unless you're there with, I don't know, your wife or your girlfriend or whatever, or whoever, whatever, right? Yeah, no fruit flag here. No colorful flags here on this channel, I'll tell you. Anyway, okay, so that's that. There was a sell up here and it worked out perfectly on the Dow. I better draw it on there for you guys. Huh? I better draw it on there. Yeah, somewhere down there. Yeah, trading is a crazy game. If you're on the wrong side and you're like, hoping for, someone, your spouse or whoever, to come and hold your hand, your partner. That's the correct name they use. The partner, your partner, to help you out. Sometimes even that doesn't work. When you're on the wrong side, you're on the fucking wrong side. You got to get the fuck out. If you don't get out, then endure more. The more it goes against you. You can't get in a trade and get married to that trade, is what I'm trying to say. And that happens with a lot of people. I used to do it too, like 15 years ago. Yeah, it's like it's telling you, you gotta be right when you do your trade and you get in your trade. You gotta have a really good indication that it's gonna go and work for you. Because other than that, it will start in drawdown and then it'll keep going in drawdown a lot of the time. Most people will do a trade and they're doing the wrong thing at the wrong time. Like they're buying a dip up here and then it just shoots down here and they're like, oh, you know what I mean? And then it shoots down more, and then it comes back, and then it shoots down more. You gotta pull the plug. You shouldn't be buying up here to begin with. You don't buy at the high. You sell from the high. You buy from the low. That's the way you do it. Okay. I know, it's harder said. It's easier said than done. I know. Believe me, I know. But that's why I'm teaching this divergence, because it always gets you in short from the top if you're doing counter trend and long from the bottom. That's just the way it's designed. That's why it's the thing that started working for me, is because of that. Okay, we already looked at the Dow. You can see, I didn't show you how many points it went down. Wow, 300. Might as well say 300. 288, 300. Went down 300. Holy jeez. Now the pound, what did it do? Oh, we're still stuck on yesterday. Oh, look at the pound. Look at the pound. Golly gee, beef. Low. Retracement. Lower low. Right? So, just in case I haven't said this in a while, when you look for divergence, where do you look first? You look first on the chart. And what do you want to see on the chart? Well, you want to see a low and a retracement and a lower low, right? That's what you want to see. Or a double bottom. In this case, it is a low and lower low, okay? So that's where you look first, and you draw your line, okay? Just like this. You don't have to, but it's better so you can keep staring back at it and staring back at it. Like right down here, you draw this line, okay? And now you're waiting for the next part of the criteria, okay? But before you wait and look for the next criteria, you need to draw it from here this way, okay? There's the divergence. So now, if and when the criteria sets up and the price goes above the two moving averages and closes up here, we would have wanted a little bit lower close on this candle, but it didn't happen. So then we got the close, and then what's that? That's our trigger to pull the trigger. Okay? So it would have closed right here, then you would have pulled the trigger, okay? And up it went, 23.3 pips. Okay? Now up here, again, you would have got your 1-to-1, 2-to-1, 3-to-1 win-loss ratio on this trade. Okay? So now the market's going up. So now what are we waiting for? We're waiting for a rally, then a pullback, and then a higher high. That's higher highs. So what does higher highs mean? Well, let's draw it on just one more time, just so people understand. Okay? So here's the high and the higher high, right? So that qualifies. This is what you first look for. Then you look down at the OSMA and you go, oh, look, we have a higher mountain and a lower mountain. So that fully qualifies the trade. You have one pointing up and one pointing down. Now that it's pointing down on the OSMA, that means we're looking for a sell, and more than likely, but does not mean anything, but more than likely the price is going to go down. And that's exactly what it did, ladies and gentlemen. Okay, so you would have sold it right there. Stop always at the swing high, 8 pip stop. And it went down 31 pips to the bottom. You would have got your money out of it. Okay, so I just wanted to go over that with you, that you first look at the chart, you find your higher highs or your lower lows, and then you use the rest of the criteria to get in the trade. And if you haven't, caught what I just said, rewind this section of the video. Write it down that you, number one, first look on the chart for lower lows or higher highs. Number two, wait for, you look at the OSMA and make sure it's divergent. Number three, you know what I mean? You get the if and the diff on this. Write it down. Take a picture of it. Take a picture right now of my chart where I'm showing you this. This is perfect examples right here. Okay? So then you can reference it. You can reference, on your next trade setup. Okay? Okay. I just shared with you, like, step by step how to do it. So down here, it doesn't look like divergence, but it is. So if we draw it from this orange one up to this one, I got too many lines on here now again. Yesterday's lines. Okay, so you see we got this one going up. And we draw it from here to here, this one going down. So you can see one's going up, one's going down. This is considered a low, a retracement, and a lower low. So these are lower lows, even though it looks so much different than this one. See what I mean? Yeah. But this is divergent. And then it was the news. Where would have you got in? Well, I would have not bought up here 46 pips higher on the pound dollar. I would wait for a lower close. And this is the lower close right here, which is also a lower close. Buy it, up it goes. So there's your trade right there. And it went up 17 pips to there, or to the top around 23 pips. Okay? And then we had higher highs and a lower high on the OSMA. And we would have sold in here. This is the pound dollar, ladies and gentlemen. This is also known as the pound futures, Great British Pound. You can trade that also on futures, on futures account. The lowest you can trade though on futures, I think it's 625 a point. So how many points did we go down here? So 47, let's say 50. 50 times 650s is $300. That's a $300 move down right here. And it would have been a beautiful, easy, simple trade because there was no fucking drawdown, man. Look at that. It's just go down, go down, go down, 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 down. So if you're sick and tired of trading the NASDAQ because it's so freaking wild, like I said, whether you trade Forex or futures, it really doesn't matter. Trade something less volatile, which is the pound dollar. That's it. Okay. So there's the trades on the pound dollar. What's the euro? Oh, isn't that sticking out at us like a sore thumb? Right here. There's our higher highs. There's our smackdown right here. Like it always seems to do. Sell it here, and down it goes. But before, we got to show you one of these. Higher close, sell it, down it goes. So there's the divergence. Oh. See, I always seem to forget to do that because, even though I go and I look at the chart and I know it's divergent, it's in my head. And sometimes it's like I think in my head I've already told you this or something, or I've already shown you this, and sometimes I don't. It's in my head. That's a very, very, how would you say, popular thing with mentors, that it's in their mind. They don't tell you what's in their mind. They see it with their eyes. It's in their mind, but they don't show you or tell you. You see what I'm fucking saying? And you know what I'm about to show you here. You know that I forget to mark on the OSMA right here, okay, the second part of the trade, right? We have our higher highs, then we look at the OSMA to make sure it's the opposite. And if it's pointing down, the price is going to go down, see? So you see how so many times I know this. The reason why I know it is sometimes I go back and I look at my video and listen to it, and I go, oh, Jason, you ditwit. Why didn't you put the line on the OSMA to show them that it's divergent, right? Yeah, this is the thing. So I have it drawn in the wrong place too. It's supposed to be right here somewhere, like that. That lines up. See, that lines up more so than drawing it from here. But there's the divergence, okay? And there's the OSMA. There's the chart. Like I just taught you, you always look at the chart first, then you look at the OSMA. If everything is okay, then you wait for the price to cross down below the 2 moving averages. You wait for the 5 to cross down below the 7. And yeah, and then you jump in the trade, and it's a freaking winner nearly every time. If you do all those steps, write it down, ladies and gentlemen. If you don't want to pick up my course, write it down. Take a couple pictures. That's all you have to do. Have your list right here on your desk of the steps, that what you must do and what you must look for. Like I said, it's all in my course. It's all in there. But anyway, because this is how you'll do it and get better and practice it and practice it. You got to follow the steps of the sequence. Looking at your chart, finding the higher highs or finding the lower lows or the double tops or the double bottoms, and then etc. And then the next step and the next step and the next step. This is how you'll get it, and you'll put it in your head, and your next time you try it, it'll work for you. It will work for you, baby. Okay? You can't ask for much more than what I just shown you and shared with you. Like it's all the steps to doing it. Me, I already have it locked in my head, so I can see a setup in virtually half a second, like 50 milliseconds. I see it. I scan the chart. I go, boom, there it is. Because I've been staring at these charts so long. But you guys haven't. That's why I'm saying write down all the steps, you know, and then you have it in front of you. Then you'll know the next time when the setup occurs. Okay, let's move on. Pound yen. What did it do? Oh, went up and then came back down. La-dee-da-dee-da. Da-da-da-da. Actually, it went up over here, came back down. Went up again, came back down. Now it's on its way back up again. Yeah, you gotta love these markets, huh? You gotta love them. Okay, I need some water. I've been talking too much, I'm sorry. That's better. Okay. Our first trade is we look at the chart. The chart right here. And it's a low and lower lows. So that's lower lows. Yep. And that's the other part. So we got one coming down, one going up, lower lows. So when you draw it on here and it's pointing up, what does that mean? It means the price is going to go up. That's what it means. Double tops, lower lows, double bottoms, higher highs. They all can tell you on the OSMA which way it's going to go when you put the line on and which direction it's pointing. Is it pointing up or down? But if it's hidden divergence, it won't tell you on the OSMA. Okay? Just to make that straight. So I would wait, like it rallied all this way. You'd want it to come back at least, and you know, make a little pullback, and then you would buy the dip, and then up at the top you would sell the rip. That's it. And then we had divergence up here too. Let me show you a high and a higher high. Right there. And right there. See it? It all lines up. See, right there. And right there. See that? Even though it's very small, okay, it's still divergence. It's 100% divergence. And then you'd wait for the sell down on the opening of this candle. It closed down here. The 5 crossed down. You would sell it right here. And that was a 41 pip winner. It's pound yen. See? That's it. This was a good winner too right here. I don't know how much did it go down if you bought it, say, right there. It went up 26 pips. Okay, let's move on here. Now the euro yen. I don't think we had that trade. Well, unless we drew it from way over here. Let's see. See how we look at the chart. We put on our line. See, there's the low. Actually, there's a trade right here. Let me show you before I forget. Right here. That is divergence. That is counter trend divergence from the trend that started downward up here, okay? So that is counter trend divergence right there. You would have got in right there, and guess what happened? It was a buy fake. And actually, if you were to do this trade, you should be looking to your left all the time. Is there resistance close by? If so, maybe you don't want to take the trade. And you would have known from this, the candle here, the close of this candle, it would have told you, no, don't buy now, don't buy this fucking thing. And sure enough, it slid down all the way down here. You would have got screwed on that trade if you would have done it. Okay? So then, if that didn't work for you, and then it went all the way down here, then you'd go, okay, well, what about now? If I move this to the low down here, and I move this over here, see the divergence? You see it. See, sometimes you got to use parts of the last setup that didn't work for the new setup. You see what I mean? Like we're using this here, the same first points of the divergence on the OSMA and on the chart. See, we're using that again from this buy fake right here. Okay? So we would have got in, waited for a retracement, like right there. Right there. The stop would be at the swing low, 25 pips. And it went up 34 pips on the euro yen. Would have been good. Now this time the high and the higher high, because it went too high, the higher high, it's not divergent here, see? Because this side of the mountain is higher than this side, and it needs to be lower than this side, okay? This side needs to be lower than this side, okay? Okay, now crude oil, what did it give us today? Nothing, it doesn't look like it, no. See, we have a high retracement, higher high, looking to sell it, right? But this high of the mountain is higher than this side. It needs to be less than this side over here in order to qualify to sell it down. Okay, and same with this here. From here to here is hidden divergence. But no, this side needs to be bigger on this side than this side. So there was no trade to sell it down this way either. Isn't that crappy, eh? Not even one trade in all of this. That's the way it is sometimes. But we do have a trade. Let me show you. Right there. And if you're already thinking, before I even put this here, a hook down. If you were thinking hook down, that's good. You're thinking and looking and remembering what I've taught you before. And that's exactly what this is. The buy fake, it closed above the moving averages. Then the next candle, they ram it right back down. I used to call it the smack down. Now I call it the hook down. And why do I call it a hook down? Because it goes up and then it hooks and it comes right back down again. And why do I call it a hook up? Because it comes down and then it goes back up and it hooks back up again. That's why I call it a hook down and a hook up. So this one would have been a good trade. You would have sold here and it went down 53 points on oil. It still was a shitty day on the 5-minute on oil. Okay, let's look at our last market, which is gold. Oh, look at that, eh? There was a trade right here too, like to sell it. But are you going to sell it before the news today? It wouldn't be wise. You'd buy it after the news, not sell it before the news. So up in here is after the news, okay? And we have hidden divergence right there like that. One goes up, one goes down. As you can see, this is pointing down. This is hidden divergence. It's pointing down, so it doesn't give you the indication to, to sell it. It does the opposite because it's hidden divergence. If it was double top or higher highs or lower lows, it would give you the direction on the OSMA, which way to make sure that you're doing the right thing at the right time. Okay, so on here, we had the news, just like all the other time frames and charts. We had a big rally up, so you'd wait for a retracement somewhere down here. You would have waited for the lower close, buy it, up it goes. Okay? Here's another one, here's another one, here's another one. There's a whole bunch of dips in here to buy it. Then what did we have? Well, we had higher highs on the chart and lower high on the OSMA. So what is that telling us? That's higher highs. Remember I told you, every time and part of the move, it's with higher highs, lower lows, double tops, double bottoms. That's all you have to look for. I keep telling you every day because I want you to learn this and you know, and do well in your trading. Yeah. So here is your lower lows, higher highs. So because it's pointing down is what I'm trying to say. It's locked in my head again and I'm trying to spit it out. Jesus. Okay. Higher highs, right? With a lower high on the OSMA. It's pointing down, meaning it's going to go down. So you would look for all the criteria in here and it all came to be. And you would have sold it right on the opening of this candle. And it went down to the bottom, 98 points on gold. It was a good sell on gold, but we gotta show you one more trade. Higher close, sell it, down it goes. Okay, here's another one right here. See this big pin bar? It's another one. Higher close on the pin bar, right close to the 5, you would have sold it, and down it goes. Now, it's always a golden rule, too. I don't think I've mentioned this before. Your entry bar, usually if you got in and it went down, say it went down 25 points, and it was about to close, usually you get out on the close if you got enough profit. You know what I mean? You don't always have to, but that's the best thing to do. A lot of times. See this one right here? You would have sold it from way up here. And see how it came down almost, you know, came down to here, but it didn't close down here. Okay? So if you got out right there, you would have been a happy man or happy lady. You would have made 57 points on gold. So what I'm trying to say is your entry candle that you get in, always try and look to get out at the close of that exact same entry candle. Okay? Okay, I think I made that clear. Okay, let's look at Bitcoin. What did it do? Oh, it just came back down. XRP is probably down. Yeah, it's back down again. See? That's all they do. They take it up a little bit and then they knock it down. What's silver doing? Oh, it's holding up there pretty good. My cousin's got some silver, so I'm checking the silver now. And it just broke out of this 1 year range of shit right in here. You know, from 20 bucks to 26 bucks or whatever it was. It was in a $6 range for a whole year. This is the monthly time frame, ladies and gentlemen. Monthly, okay? That's what I'm looking at. For long-term investing, that's what you'd want to look at, either the weekly or the monthly, and a little bit of scalping in between would be on the daily. Okay, that's it. We're done. Thank you so much, ladies and gentlemen, for coming out today and watching the show. I greatly appreciate it. I'm about to go for a walk out in the rain and quack, quack with the ducks. I'm going to go walk with the ducks. Quack, quack. I know you think I'm a little fucking nuts. I understand. I don't care. But anyway, if you trade this afternoon, trade safe. Be a good boy and girl. Look at all your criteria and do what I told you today. Go and take pictures of what I shown you on the charts. You know, Write down the rules, the whole criteria, every step. Look for it on the chart. Look for it on the OSMA. Look for, you know, the setup and everything else, and you'll see. It'll help you so much in your trading. So that's it. Good luck. Good trading.